But that's not people classify or people see you when you speak big English. That means you are clever, you are a good student. But that's not the case. In trading, it's not about the complex stuff. So I've taken my time to really, really dive into how trading works. I've really dedicated myself watching the chat. You see, a lot of people are not having the time to be watching the chat more often. But for me, I'm someone who have dedicated himself to watch the chat a lot of time or more often. So whatever I talk about, if you really put it into practice, you notice that it's really, really works because I've dedicated my time to watch. It is not something, most of the things that I talk about is not something like I heard someone saying it on YouTube just once and I just started telling people that it's something that I've really, really tested, something that I've observed, witnessed the markets like kind of repeating the same pattern. That's what I teach, that's what I preach. So if you start implementing it, you notice that it really, really works. Yeah. So a lot of people, I know a lot of people, so some people have sent in. Yeah, I know a lot of people are really, really benefited from most of the things that I talk about. So, who again, apart from Grace, do you have anyone who can testify the things that who have benefited from the teachings that have been given out? If you have bought the course and you've benefited from it, let me know. How many people? Do you have someone to over here?
Yes, please.
Okay,
Please,
please. What's
my name is Christian.
okay?
Yeah, and I just bought the course. I'm not done with the videos. I'm now also sometimes when I watch, I practice it and I send it to you. You sometimes say, "Oh, I am trying," and sometimes too you correct me. And mostly the kind of practice that I sent to you. So I'll say I am in progress. I am learning it small, small. So
Okay.
I'll just thank you and I mean
Oh,
continue my hard work.
okay. That's great. Yeah.
Yes, yes.
All right. So one thing I would say is what let's be patient with ourselves. A lot of us are kind of very aggressive when we come into the game at the initial point. One thing you have to understand that trading is a profession and trading is not a Ponzi scheme. Ponzi scheme is something that when you go inside, within a few weeks, within a few months, you are going to get returns on whatever you invested in. Trading is not a Ponzi scheme. This is a financial market. This is something that has been there in decades. It was there before you were born, and you are going to die, and this thing is still going to be there. So one thing we need to understand is the reason why we are easily getting access to this thing is because of the internet, because of the advent of technology. That's why it's easily accessible to us. But don't just be saying it is something that is passing by. So you are just going to be aggressive on it and just going in big, risk everything that you have, and you just run away. Trading is not going anywhere. I remember when I was learning trading, that was 2018. That was what my first mentor told me, that this thing is now going to get bigger. So if you are new to this thing, it is now going to get bigger. So far as you are spending currencies, so far as you've not stopped spending currencies, it is still going to be there. And even if you stop spending fiat currency, that's the money, the physical currencies, it is still going to be there. Digital currency is going to be what is the future. It's still going to be there. And if you have knowledge in one, you can still what implement or apply it in the other one. So don't be angry with yourself. For me, as an example, I've taken it slow because the skill set is most important. One advantage about trading is what you can struggle for 5 years and just a few months can change everything for you. That's what you need to understand about the trading. You can struggle for 5 years, 6 years, but a few months, within a year that everything has clicked, you are just going to scale up your life very fast. That's what you need to understand about trading. So it is not going anywhere. So please, the reason why most of us too are not seeing results is because of the kind of attitude we have towards trading. We are really, really angry. One thing you need to also understand about this game is what always keep on reminding yourself that the moment you keep on breaking your rules, you are kind of taking yourself back. Okay, you are delaying your success. That's what I always tell myself. If I'm kind of disobeying my rules, what I tell myself is what, you are delaying your success. You are delaying your success. This is what keeps me disciplined. You get it? This is what keeps me disciplined. And one thing that I want to tell you people too is what, most often when I'm having the trainings, I do hear people asking me a lot of things about, do you trade? What was is demand and supply the same as support and resistance? Is SMSC, SMC liquidity? One thing you need to understand about trading is what, everyone sees the market differently, and we're having thousands of way we can what, trade this forex market, or we can trade the financial market. You get it? So you have to make sure you are sticking to one particular thing. A lot of people too are kind of, we have, it has taken us a long time for us to what, succeed in this game, because we are focusing on a lot of things. So trading is the same thing in life. If you want to be successful in life, you having thousands of ways you can make money from. You can make money. You get it? You're having thousands of ways. Stick to one particular thing and make sure one thing is clicking. So let me give you an example. I remember when I completed school, a lot of people, when I completed school, as an example, when I completed the university, I was kind of very frustrated because some of my friends were trying to apply for, trying to go outside the country. A lot of people too were applying for jobs. Like a lot of people, most of my friends were trying to do something that was what, that is going to secure their future. But one thing, one thing that kept me on the grind of focusing on my, I told myself, let me focus on this thing. You get it? Let me focus on this thing. I didn't pay heed to what some of my colleagues were doing, traveling. I know that when trading clicks, I can earn in dollars, even if I'm in Ghana. Okay, I can still earn in dollars, and it's even more advantageous than even going to, because when you are earning in dollars, if you go to the Western world, or if you go to America, you are earning in dollars, you are going to pay a lot of taxes. The living expenses is high as compared to comparing it to when you are in Africa and you are earning in dollars. There's no tax on you. The living expenses is very low. You get it? So I compared all these things, and I told myself I have to focus on one particular thing. I have to focus on this my forex thing and build a skill set. I didn't put pressure on me. I didn't kind of distracted by what my colleagues, and some of them started succeeding. A lot of them found themselves jobs. A lot of them were working. You get it? They were getting paid. I was still in the house. I was kind of focused. I wasn't envious of them getting money. A lot of them to also get married. Things were getting well for them. But you know something? When my life started clicking, what I've been able to build within the space of 2 years, I've passed them all. I'm not saying I've reached, but most of the things that, like, I did, no one paid me, no one was paying me, but the things that I've been able to do within the space of less than, like, within the space of, let's say, maybe 2 years, that things started clicking for me. The things that I've been able to build for myself, the things that I've been able to do, you get it? It can't be compared to most of my I will, because of what I was focused. What I'm trying to say all is what, a lot of us are kind of distracted in life. We are not focused in life. Okay, we are focusing on a lot of things because our mindset is what, the short-term gratification. Our mindset is to get things quick. Life does not work that way. I keep on talking about this thing, and most people might be saying, like, I like talking. Life is not like a short nothing. If you are trying to get money, it's not going to come short. Anything, or yeah, anything that comes in a short, like, you get it very quick. One thing you need to understand is what, it's not having longevity. So let's keep on the grind, no matter no matter the difficulty. Let's focus on one thing and be master of that thing, because before you what, we venture into different thing. You get it? A lot of us are kind of distracted. We are focusing on a lot of things. So you don't get the time to build one particular thing. Even if it's going to take you like 6 years to build something that's going to give you the freedom, why don't you like sacrifice most of the things and what, focus on that. A lot of these rich people that we see them on we see them around our communities have sacrificed a lot of things. Okay, some of them sacrificed their friendship because a lot of friends were not believing in what they were doing. So they sacrificed a lot of their friendship. They have to cut some friends off. They have to cut some relationship off. You get it, to focus on one particular thing. And now they are rich. You might think they just woke up and everything started clicking. They've really, really what sacrificed a lot of things. So please, let's sacrifice. And when it comes to trading strategy too, what I'm trying to say is what we're having a lot of strategies. The way you have a lot of ways you can make money is the same thing you're having thousands of ways you can what trade the forex market. You get it? You haven't thousands. So if you see one guru with Cybertruck with Lamborghini doing this, and you are also doing this, that does not mean he is what doing something better than you. Trading gives opportunities, trading gives chances every single week. Okay, so if you are going to be patient and stick to one strategy, you are going to see growth very fast. So for me, one thing you need to understand too is, well, no matter your strategy, losses are going to come. That is what we need to understand. And this, not understanding this at my earlier stage also really, really delayed me. I was thinking like I have to win every single day. So I was kind of really, really distracted with my what. When I lose a trade, I get distracted. I think like my system is not working. But one thing you need to understand is what, as we keep on improving our system, no matter how you improve or no matter how we will refine our system, still losses are going to become still losses are going to come. So what you have to do as you start a fresh week, we have to keep the focus. We need to have the trading plan. You get it? We need to have the trading plan. The trading plan of what? What are we going to focus on? What are the things that are you going to focus on before you execute a trade? So in this training, what I'm in this what do you call it? In today's session, what I'm going to be talking about is I'll be trying to break down my system for everyone to what uh, for most of you for everyone to understand what I mostly focus on. You get it? What I mostly focus on. So you need to be focused, and especially when it comes to even the currency pair you are going to trade or the instruments you are going to trade. With that one too, you need to be focused. A lot of you are trading a lot of what instruments. You need to what? You need to have a plan. You need to journal your trade. As you are journaling your trades, that is when you will know the instrument that really, really gives you results and the ones that are not giving you results. Trading is a personal journey. Okay, don't think someone is going to make you profitable. No one is going to. You can watch all the inspirational videos you watch on the internet, admiring a lot of traders, but no one is going to make you profitable. You are the one going to make yourself profitable. So kindly stay on the grind by watching the chart. This is what is going to make you profitable. Watching the chart every day is what is going to make you profitable. If you think you can't watch the chart every day, then trading is not for you, because you need to what? You need to be watching the chart every day. That's the best teacher. Watching the chart every day is the best teacher. Okay, so you have to first of all, after getting the mentor, someone teaching you his system or strategy, the rest is for you to implement. Implementation comes with what? Implementation comes, or maybe experience comes with when you experience or witness the market for a very long time. That is when the experience is going to come. I cannot give you the experience. Okay, what I can give you to you is what? My model. I will teach you, and the rest of the experience is going to come for you. So you admiring, or you kind of like, oh, I want to be like this guy, I want to be like this guy, that is not what is going to make you profitable. Okay, the profitability is going to come from you. So put in the work, stick to one particular thing. When it comes to time frame, a lot of people kind of also get confused when it comes to time frame. One thing you need to understand is what we're having a lot of time frames. Okay, time frame simply means what? A duration or a period in which these prices are formed. Candles are prices. That's what you need to understand. So it's a duration or a period in which these prices, okay, or candles are formed. That's what you need to understand. So we're having a lot of what? Time frames over here. You get it? A lot of time frames over here. So which of the time frames do you think work best for you? You need to also practice. You need to also implement it. You need to also what? You need to practice to see what works for you. So if you are not tracking your journey, if you are not tracking what is working, you will be in this game for 50 years and you are still going to say Forex doesn't work. This is a scam. This is this. No one is making money from this game. because you are not tracking your what you are not journaling your trades, you are not keeping track of your your journey. So that's what you need to understand. So trading is a personal journey, so that's what you need to understand. It's a personal journey, so have time for yourself and stick to the grind. You get it? Stick to the grind. Yeah. So what I'm going to do with the today's session is for me to give you to show you what I mostly focus on. Okay, so you are going to do a weekly forecast, what I mostly consider or look for when it comes to when it comes to me executing a trade. You get it? When it comes to me executing a trade. So those who have followed me for long, I think by now some of you might understand what I mostly look for. Okay, and since ever since I started trading, these are the things that I've been concentrating on. One particular time, the time frame that I focus on are what I still keep on doing, but the clarity is now what is the clarity is wide now. I'm kind of getting the clarity now. You get it? Because I stick to one particular thing. I didn't shift, oh, because this one is doing liquidity grab, so I'm also going to do liquidity grab. One, this is doing this, so I'm going to do this. I'll stick to one thing and keep on refining, keep on refining, keep on refining. Okay, that is what you need to understand about trading. The more you do it, the more you get the clarity, the more you know, oh, this is how you have to execute it. That time, this is the time that you need to execute. These are the instruments you need to focus on. So all these things you need to you need to be, it tells you that you need to be focused on one particular thing. Okay, so one thing I mostly do when I come to the chat, so a lot of people have sent in some. Okay, PK, please, how can we do journaling our trace? Yeah, so last week, I don't know whether you attended the training, the session. Last week, I showed you my this thing. So let me show you to you. This is how you can journal your trades. Every trade that you take, you need to, so it's like being a businessman. You see, for every organization or for every business, please, can you hear me? Can you people hear me?
Yes, sir, I can hear you.
Yeah, so for every business, you get it.
Yes, we can hear you.
For
We
every
can hear you.
business, yeah. So trading is a business. Okay, trading is a business. You see, for every business, they keep track of their activities. They keep track of. So what are the things that businesses track? They track their what? Revenue. They track their expenses. Okay. They track they track their sales. They track where they are what? They are getting their customers from. Okay. So if you watch this, I'm having a business. So if you watch this file, I don't want to open the file. If you watch this file, you see this file. This file is what? My business journal. Okay, I'm having a business that I run. So this is my journal. We keep track of our expenses, our daily expenses. We keep track of our revenue. We keep track of like where we are getting our customers. Okay, where our customers are coming from, which platform we do online to, we do face to face. Are people coming to the shop? How many people are coming to the shop every month? How many people are we getting from online, the various platforms? Maybe if Facebook, if Instagram, if maybe the traditional this thing, a Jumia, if GG, you get it. We track them so that at the end of the month, you will know where what our traffic is coming from so that we put in much effort, okay, by getting more. Because one thing about business, or one thing about life development or life improvement is what, the moment you see something working for you, what can you do? Who can tell me? If you are in a business and you notice that this is uh what is working for you, what do? Who can tell me?
You
I
keep
mean,
to it.
you
You
said
keep to it.
you will skill. Okay, you will skill. So maybe if you are spending 500 cedis, or maybe if you are spending like one cedi, okay, those who are not Ghanaians, if you are spending like $1 for you to get the customers, and you know that a lot of people are coming from that side, what you will do is what, you will increase your budget to get more people, because you know that if people are coming from this side, they buy. So what you do is what, you increase your budget. You get it, so that you can get more people. So it's the same thing in trading. We keep track of our journal so that what we journal our trades so that you will know what works for us, the instrument that is working for us, the time frames that are giving us the results, so that what we eliminate the ones that are not working for us. Okay, then you focus on the ones that are working for us. Trading is a business. Business, we track our sales, we track our expenses, we track our what, our revenue, the money that is coming in. So at the end of the month, what you will do is what, okay, this month we get this amount of what revenue. You get it? So that means comparing, then you start comparing and contrast. Okay, last month this is the amount you made. This month this is the amount you are making. So are we making progress, or are we kind of retrogressing? You get it? You keep track of all these things so that you keep on either to put in much effort, because it's kind of things are slowing down. You get it? So if you are not keeping track of all these things, it's going to be very, you will be comfortable because money is coming in. So you'll be comfortable. You start spending lavishly, and what is going to happen is what you will notice that one day you'll be there and your business will collapse. Okay, revenue, money is not coming in. Now you are going to find it very difficult to pay your workers, pay your expenses. Okay, it's going to be very difficult. So that's what you need to understand. Keep track of everything that you do in trade. So it's the same thing in trading. If you are not keeping track of your trades, so if you notice that those who started following me from last year will notice that I've kind of taken out a lot of instrument. Those times I used to trade I have some trade instrument that I used to trade, but you see now I've shortlisted most of them, and these are the ones that I kind of trade now. You get it? These are the ones that I trade now. You get it? Why? Did I just wake up because I watched someone trading this and I started trading this? Nah, this I what look at my journal and I notice that these are the ones that mostly I get winning trades on. That is why I'm kind of what taking sticking to this one. And I know maybe with time I will keep on eliminating or bringing some in. Okay, that is how it works. So what, that is why we say trading is process. Trading is a journey. Okay, you refine, refine. There's no destination when it comes to trading. You refine, you refine, you refine, you refine, you refine. But the beauty thing about, you don't have to get to the journey before you start making money in trading. There's no destination, so you make money as you are moving on. You adjust, you keep on refining. You get it? So that's how basically trading works. Okay, so no one is having the 100% key to trading. No one, but we are still making money because of what you call risk to reward, or risk to reward ratio. You get it? So we keep on making money. So that's how it works. So when it comes to this time frames, as an example, why did I even say, oh, my directional bias or my sectional bias is solely on the H4 time frame? Because of implementation, because of what, practicing. Okay, because of my trade journal. That's why I noticed that this mostly works for me best than the other ones. You get it? That's why I'm kind of sticking to this thing. So that's what you need to understand. So a lot of us are confused because we don't know what to focus on. That's what a lot of people kind of, and to as I it's like I'm talking to those who are already trading. So those who are coming in into trading, one thing you need to understand is what, you need to be focused to be successful in this journey. If you are focused, within some few years you start seeing results. If you focus on one thing, and one funny thing about my journey is what, most of the things that I ignored, okay, when I was those times I was kind of immature in this game, so I was easily moved by people, the results of some people. So I kind of shifting, stopping this, using this, and I've come to the realization that most of the things that I kind of eliminated from my system, I'm now using them. Like, I've come back to use them again. You get it? So imagine if I was kind of focusing, I was focused, I would have seen results a very long time before now. You get it? Yeah. So that's what it's all about trading. So understand this, okay? Understand this. So let's talk about the things that I mostly focus on. Okay, the things that I mostly focus on. So when it comes to me analyzing the market, okay, so for you to, trading is basically about what, you are trying to predict the activities, or you are trying to predict, yeah, the future happenings of what, a country. Okay, because one thing you need to understand, every currency, or even if it's a commodity, or even if it's a stock, it is affiliated with what, a country economy. So what you are trying to do is what, you are trying to predict what is going to happen in a country. Okay, Okay, what's going to happen? So most of the activities happening in the country has direct impact or direct reflection on the currency too as well. That's what you need to understand. Okay, so what you are trying to do is what you are trying to predict the future happenings of what this price movement, this exchange rate, trying to comparing the price value of two country currencies. So you're trying to what predict the direction of what this country currencies. You get it? So for you to be able to predict, or for you to be able to determine that, what you mostly do is what we having two ways you can be doing that. It's either through what the fundamental aspect, or it's either to what the technical aspect too as well. So when it comes to the fundamental, that's when you look at the economic activities such as maybe the GDP, the interest rates, the retail sales, the inflation data, to what to be able to analyze or to be able to predict something of that sort. You get it? And the social events like demonstrations and those things all affect. If let's say maybe in your local country, maybe there have been like maybe one week demonstration. One thing you are going to be noticing is what your country currency will start depreciating. The reason is what investors will not love to invest in such country. Investors will not love to what invest in a country where there's no peace. You get it? Because everyone wants good returns on his money or his investment. So if there was kind of confusion or instability in a country, there was no way an investor, a sensible investor, will invest in such country. And when money, people are not demanding for your local currency, what you have to understand is what the country currency is going to depreciate in value, because in basic economics we learn that the higher the demand of something, what happens is what the prices of that thing really what hike, or it increases. Okay, so if investors, people are not demanding for your country currency, the value would depreciate. You get it? So that's the fundamental aspect. You get it? But you don't have to be the father of economics before you be able to what to understand the fundamentals. Okay, you don't have to be the father of economics before you understand the economic events and those things. And we have geopolitical events. So we need to one thing the one thing you need to understand is what fundamentals play role in trying to predict or trying to speculate the direction of a country currency. That's what you need to understand. Fundamentals really plays a role in what trying to predict, and it's even plays vital role. You get it? It even plays vital role because our lines that we draw on the chart does not move price. You get it? The lines you draw on the charts, the horizontal lines, the vertical lines, and those things doesn't move price. What moves price is the fundamentals. You get it? So we have to, at least you need to get a clue on how the fundamentals works. Okay, so that you can implement it with your technical analysis and what you make informed decisions. So when it comes to the fundamentals, the website that I mostly use is Forex Factory. So this is for the sake of the beginners. Okay, so I use Forex Factory. Okay, I use Forex Factory. You're having a lot of platform. You can use Investopedia, you can use investing.com, but I use Forex Factory. This is the OG. Okay, you having AIs that's but I use Forex Factory factory.com. So if you are a beginner, if you want to track the economic, if you want to track the fundamental events, okay, this is the website you are going to use, the forexfactory.com. This is what I use when it comes to me trying to what uh, me trying to read what is happening in the world. So if you log in forexfactory.com, you are going to what forexfactory.com. So you can see it over here. Then you log into forexfactory.com. Okay, so you come to the calendar. Okay, so you see we're having different folders. Okay, we're having different folders. We're having the red folders, we're having the yellow folders, we're having orange folders, but I've kind of scale to only the red. I'm focusing solely on the red because these are the ones that mostly have impact. Okay, I don't watch the yellow ones, I don't watch the orange ones. This is the ones that I pay attention to. So if you want to just limit it to the red ones, you can come over here. Okay, you can come to this one. Okay, then you untick. So I pay attention to the red and the gray. The gray one is what in case maybe we having bank holidays, or maybe bank holidays, that's bank holidays, or maybe a festive season. Okay, That's what the gray mostly you are going to what uh, that's that signals that or the gray signals a bank holiday or maybe festive season. You get it. So I pay attention to them. One thing about the bank holidays, one thing about the bank holidays is what price moves slowly. You get it. Price moves slowly, and if people because people are not participating, and if people are not participating in the forex market, one thing you need to understand is what brokers are going to what increase their spread. The reason is what if spread increases, what it simply means is what people are not transacting with such currencies. People are not using the currency to buy and sell. Because anytime if you are buying gold, okay, if you are buying gold, what the brokers mostly do is what they need to find a counterparty, someone who is going to take the opposite side of your trade. So if you are buying gold, okay, if you are buying gold and they need to get someone who is going to also what buy your dollar. If you are buying gold, that means you are selling the dollar. You get it. So they need to find a counterparty for you, someone who is going to take the opposite side of your trade. So if people are kind of not in the market to transact, it's like you are trying to sell something, you are going around your community to sell something, and maybe there was conflict in your community. And if there was conflict in your community, people are hiding in their rooms and you are just roaming about to trying to sell maybe your tomatoes or something. Do you think is it going to be easy to sell that tomatoes at that particular time as compared to when there was peace in the what there was peace in the community, people are outside? It's going to the rate that's the rate at which you are going to sell your product very fast can't be compared to when there was conflict, people are inside their rooms and those stuff. You get it. So let's take the COVID as an example. When COVID happened, they quarantined us, or maybe like they told us not to move out. You get it. And what happened is what people are not moving to the market. So if you are going to the market, sales are definitely going to what reduce. So it's the same thing in the forex market. If if people are not participating in the forex market, spread is going to increase because it's going to be very difficult for your brokers to find a counterparty to take the opposite side of your trade. You get it? That's why sometimes some of the currencies, especially if you are trading the minors, okay, the GBP card or maybe the cross in the GBP card, Euro card, and those, the spread is really, really high. The reason is what? A lot of people are not trading. Okay, and when it comes to gold and those things, you see the spread is very low. The reason is what a lot of people are what trading such, especially the major ones, the dollar, the GBP USD, USD JPY. The spread is really really low because a lot of people are using it to transact. So it is easy for your brokers to get a counterparty for you. You get it. So that's why the spread is very very low. You get it, very low because it is easy for them to get a counterpart. So what I'm trying to say is what when there was bank holidays, when there was festive season, when the moment I see a gray in a session, I don't participate in such session. You get it? I don't participate in such session because I understand that what those bank holidays and market is going to be very slow movement of price. And one thing too is what if those bank holidays price doesn't move a lot, you see a lot of wicks. Those who are trading the $10, the $20 are the ones trying to get to make money from the market. Those who bringing in big volume, those who move price. So you see when there was NFP, you see how you saw a big candle over here. You get it because there was what there was major market activity. You get you see huge market. By the moment the market was kind of slowing down, you see this was Asian session when the market was about dying. You see the wicks, and when there was active market session, the market started what moving. So we have a lot to talk about when it comes to trading. Trading is not only about the technical aspect. The time you trade to plays a role. Okay, the time you trade plays a huge factor in your trading profitability. That's what you need to understand too. So understand that the time you trade plays a huge role in what trade trying to what be profitable in this market. That's what you need to understand. You get it? Yeah. So I pay attention to the red and what the gray one. I don't pay attention to the orange one and the yellow one. That's what I don't pay attention. So that's why I've already only take what the red and the gray one. Yeah. So these are the activities, and sometimes too, you need to pay attention to the news too. So the news, mostly what happened to the news is what, when there was unexpected news, you see all these things, this news event that you are seeing over here is something that most often happens every month. You get it? It happens every single month. That's what you need to know. The CPI, every month there will CPI. Retail sales, every month there will CPI. So these are all predetermined news events or economic activities. Unemployment rate, every month it happens. NFP, every month it happens. So these are the news that it is what it is predetermined. It is already determined. Okay, that this month this is what is going to happen. This is what is going to happen. So these are the datas. Okay, but when it comes to the news are what what mostly the news are mostly the activities that is what that is how should I put it? That is not predetermined. Okay, it is not predetermined. It just happened all of a sudden. Maybe when there was Russia and Ukraine, no one knew Russia is going to attack Ukraine. You get it? No one knew something of that sort. No one knew Iran is, or maybe US is going to bomb Iran. What do you call it? No one knew something of that sort. So if you want to see the unexpected news event, you come to the news. If you come to the news, that's where you are going to see the unexpected news event. So you need to, like in trading, you need to be very, very attentive. You are the person checking these things. You are the person checking the technical. So you need to focus. Okay, so those people when they are in the street and they are trading, you are just gambling. Okay, because trading, you need to have the peace of mind. You need to be focused because you need to check all these things. How can you be doing these things when you are walking in the street? It is not like the sport betting that you can just be arranging your odds anytime. Trading, you need to be very, very focused because you are going to be checking the news, you are going to be checking the calendar, you are going to try to interpret to see what's going to happen. You get it? All these things, you are going to be checking them. So if you are not paying attention to them, please, you are going to fail as a trader. Okay, so the news, as I said, you check over there then to see if there was red over here. So let me see if you have had any red. If there was red, that means what, the news is very impactful. So what you can do is what, you can follow the news. Okay, maybe GDP of US is high. One thing you need to understand is what, if GDP is high, that means the economy is doing well. So what's going to happen is what, the currency is going to appreciate in value. You get it? The currency is going to appreciate in value. So if the currency appreciates, you are going to see more of people, as in maybe you are going to see bullish trend. That's what it is. So you need to pay attention to the news, the this one. Okay, you pay attention to the news and the calendar too as well. So let's see. Tomorrow is Monday. That's what. And tomorrow is going to be 8th of September. Oh yeah. So let's see. What's the next? Let me check. Okay, so tomorrow is going to be 8. So we don't have any red folder. Okay, so if you bring the yellow ones, you are going to see. Let me bring the yellow ones, but I mostly don't check them. Okay, so there was no news event on Monday. So one thing I've noticed, if there was no news too, the market become very dry too as well. So you need to be very, very cautious. But one thing about me is when it is Monday, I only trade the New York Stock Exchange session. I don't trade the lending session. I only focus on the New York Stock Exchange session. That starts at 1:30 p.m. GMT. That's when I start trading the lending session on Mondays because on Fridays a lot of people were hot, a lot of the institutions are the ones that move the market. Okay, the banks, those are the people making the big transaction. You get it? So those are the people that mostly moves the candles. Those are the people that move prices. So if they are not participating in the market, like on Mondays, most of them are kind of now setting up for the week and those stuffs because it was when during the Friday, a lot of people were rushing for weekends, so a lot of them didn't prepare. So on Monday morning, a huge transaction mostly doesn't have. I'm not saying it's not profitable to trade, but for me, according to, as I was saying, data is very important. According to me, Mondays I kind of experience a lot of losses, so I don't trade. Monday morning I'm kind of very reserved. I wait for the New York Stock Exchange session. That's when I see good moves, so that's when I mostly trade. Okay, I'm not saying you can't be profitable, so you can also test it yourself. Don't just take my words. Okay, you have to also implement it like that. So on Tuesday I start lending session, and lending session, when it is standard time, daylight saving time or standard time, I start what, trading around 6 a.m. I start trading around 6 a.m. GMT. That's when I mostly start trading. You get it? That's when I mostly start trading. So that's what you need to understand about my systems too. So on Tuesday I start learning session 6 a.m. to what, 3:30. Then I'm done for the day. Yeah, so that's the technique. That's the fundamental aspect. So you need to focus on. And when it comes to the technicals, there are a lot that I check. Okay, I think time technical analysis parts. So there are a lot that I mostly pay attention to. Okay. So with the technical analysis, these are the instruments that I trade. So gold, GBP, USD, USD card, GBP card, Nasdaq, NZD card, AUD card, Euro card, GBP, BTC. These are the ones, the instrument that I check. Okay. Yeah, so if I'm doing my analysis, what I mostly do is what, I start analyzing from the higher time frame to the lower time frame. You get it? I start analyzing from the higher time frame to the lower time frame. So you will try and break, because of time. You will try and break, because some people are having questions that they want to ask. So you try and break one of the instruments down, so that I'll start taking your questions. Yeah. So when it comes to me analyzing using the technical aspect, I start from the higher time frame, which is what, the standard time frames I focus on. These are my standard time frame. So standard time frame. So these are the time frames that I focus on. The monthly, the monthly, weekly, daily. I use them all: H4, H1, M30, and M15. This is my standard time frame. So some people can use 1 minute, some people can use my 2 minutes. This is the what I use. Okay, based on my experience, this is what I use in the market. Okay, so if I'm analyzing, so let's take gold as an example. A moment. If I'm analyzing, what I do is what, I do my top-down analysis. You get it? I do my top-down analysis. So I analyze from the higher time frame to the so with the higher time frame, when it comes to the monthly time frame, when it comes to the monthly, weekly, and daily, what I do most often is what, and the H4, what I do most often is what, I check out my support and resistance levels on those time frames. Okay, and when it comes to the H4 time frame, with the H4 time frame too, what I use the H4 time frame for is what, my sectional bias. Okay, so my sectional bias simply means that is the time frame I mostly check my the direction of the direction I'm going to trade on. You get it? The direction I'm going to trade on. So this is where I determine my sectional bias, or the directional bias. Okay, this is what I mostly do. So when it comes to gold, what I would do is what, I would do my top-down analysis. I'll do my top-down analysis. So with my top-down analysis, I'll analyze from the higher time frame to the lower time frame. Okay. I'll analyze from the higher time frame to the lower time frame. So the monthly time frame, that is what I determine my support and resistance. So let me see. There's some people having question. PK, please, how do you journal trade? Okay, please, why is it that price on my trading view does not match with my MT5 even on? So I'll talk about it. Please, can you allow him to flow, ask a question on that plans to business or concern outside what he thought can be asked? Then after any other business concern outside what he thought. If not, you will distract us. So as a beginner, where should I start? I should focus on. Yeah, so I'll talk about that. Please say, why don't you want us to? I should show you my business journal. I'll show you my journal too as well. Yeah, send the video when done. All right. Yeah, so I'll analyze from the monthly time frame. So the monthly time frame, this is where a lot of people mostly find it difficult. So the concept for me drawing or plotting out my support and resistance. So you see, when it comes to the support and resistance, a lot of people are using a lot of concepts. Okay, some people use psychological levels, other people to use Fibonacci levels, other people to use other block. They are all support and resistance levels. That's what you need to understand. Okay, so my concept on how I draw my support and resistance is coming from market structure. You get it? So if price is making highs and lows, if price is moving up, it is going to come up over here. Okay, it's going to come up over here. So this point is going to be my resistance level. So if price break, anytime price will break, one thing I understand is what price mostly pulls back to the support. Okay, so if price is retracing, it's going to retrace for the uptrend to still keep on maintaining. It's either going to what, these are the highs and lows. So at this point, this becomes the high. Okay, this becomes, okay, at this point this become the lows, this becomes the high. You get it? So for price to what invalidate the uptrend, okay, it should come down to what this side before it will invalidate the what uptrend. So at this point the uptrend still maintains. If it comes here, it still maintains. So this one level, if price is coming down, it's going to come to this level, or it's going to come to this level to maintain the uptrend. You get? So this is the concept I use to draw my key levels. So if let's say it comes to this side, or it breaks this one, this point becomes invalid. Now this is the valid level, okay, because price has already broken this one. So at this point, this is no more valid again. So this is the valid level, okay, because those, if you look at your immediate swing, there's no higher highs or higher lows. So price is having room. The next level, unless maybe the market or maybe price decides to just make a U-turn. With that one, I can't tell. But my levels, the levels that has been displayed for me to what to target on are these levels and these levels. If maybe the market decide to turn in the middle of this range, with that one, I don't know. I have no idea about it. So I will just wait for the support to be created before I will just make a decision. You get it? But if price is moving, these are the levels I'm targeting. This level, okay, or this level. These are the levels that I'm targeting. You get it? These are the levels that I'm targeting. So that's what you need to understand. This is the idea. But if price decide to break, okay, the moment it break, all these ones become invalid. All these ones become invalid. So what I'm expecting is what, this is the level I'm expecting price to what, come to this level or to this level. These are the levels that I'm expecting price to what, to be coming on. You see, this basically my concept I use to what, I don't use psychological levels, I don't use Fibonacci levels. I've used Fibonacci before, I've used psychological level, I don't know how to go by it, but I've used Fibonacci before. But this is what's giving me the this thing. So I use the same concept when I come to the higher time frame, like the monthly time frame and to the H4 time frame. So as price has broken this one, I'm expecting it to come to what, this level. So this is the level I'm targeting price to what, to come to. So I'll plot it. But before I'll plot it, I have to get the tips and dips very well. So how will I be able to get the tips and dips very well? What I will do is what, I have to change it to what, line chart. Okay, if you change it to line chart, I have to make sure it is touching the tips and dips very very well. You get it? You need to make sure it is touching them very well. Yeah. So these are the levels. Okay, if price is coming down, because this is the level, if price is coming down, it is going to come straight, unless maybe it just make a u-turn, that's fine. But this is the one that is clear to us, that's we know that price is going to come to this level. Yeah, so these are the levels that I'll plot. This is the current level that I'm going to what plot. Okay, this is the current level. All right, so you need to check left anytime. So sometimes I mostly get this question. Oh, Pakwis, where should I mostly start my analysis? Okay, so this is the current market price. If we're analyzing, you have to look left, okay, to see if there was data to your left, because what we are basically doing when it comes to trading is what we are we are doing, what we are reading historic price data. Okay, we are reading historic price data. That's what we are basically doing. So someone is asking, what's the broker do you use? Okay, so I've sent in the link over there. So you can click on the link to sign up to the broker I use. Okay, so I use XM Global. So you can click on the link over there. You get 100% bonus if you are in Ghana and Nigeria also. So you can click on it to sign up to the broker I use. If you have any issue with XM, please kindly contact me. Okay, if you have any challenge or issue, you can contact me. Yeah, so as I'm saying, a lot of people. Hey, this thing. Let's go. Yeah. So if we are reading price, we are using historic price data to make the present decision or present what. Yeah. So what you have to understand is what you need to check your left. Okay. Check your left to see if there was any historic price data. But one thing you need to understand is what last week gold went to what the level that it has not gotten to. Okay, since gold was listed, gold hasn't gotten to this price level before. So 1 ounce of gold went to the price of it being sold at what 1 ounce of gold was costing 3,602 dollars. That was the price. 1 ounce of gold. Okay, 1 ounce of gold is costing that. So those who are into galamsey who understand the ounce that I'm talking about. Yeah, so 1 ounce of gold was costing, got to the level of what? Let me check the tip. Was costing 3,600. Okay, that's the highest level gold has got into. So that's why we don't have any data to our left. So this is where gold was listed. This is where it started. It was accepted as a medium of exchange. So it's in 1933. You see the chart of gold. This is where it started. So you don't have any data to our left. So we can't plot our support and resistances looking left. So this is the only what data we have before us. This is the data we have. So monthly time frame, this is the only thing I'm going to do, because if price decides to come down, it's going to come down to this side. So let's move to the weekly time frame. So on weekly time frame, we need to look left too as well. Okay, as I'm saying, before you read price, you need to look left. So if you look left, do you have any data to our left? You don't have any data to our left. Okay, so if price is coming down, because price just did lows, it just consolidated over here, broke out from the zone. So if you look left, if price is coming down, it's going to come down to this side, to this side. Okay, so we need to what, bring out the level. So those who have been asking me how I draw my levels today, I'm showing it to you. So you see, when you come to this side, if you watch this one, you see those error information of price. So those who have attended my training before will understand. Error simply means what? Gap. Okay, you see there was an error. This is a bullish candle. This is how price mostly forms. This is how price mostly forms. So let's say, let's forget the color. Let's assume this is what, a bullish candle. So if this is a bullish candle, if this is a bullish candle, this is the opening, this is the close. So the next candle is going to start at where the previous candle closed. So it's going to start over here. Okay, It's going to start over here. By looking at this candle, if you look at this candle, this is what the opening is, the close. You get to understand that what this is where the next candle started. So you can see there was error over here. Okay, so when there was an error in formation of price, it mostly becomes very difficult for you to know the various turning points. It becomes very difficult for you to know the key levels. You get it? So what mostly helps me when I kind of don't get the levels, the turning point very well is what I change it to line chart. The line chart, the I've tested this one for a very long time, ever since I started. If you want to get the correct support and resistance, use line chart. Okay, if you use line chart mostly gives you what the accurate support and resistance level. So the type of chart I mostly use are the line chart. So you change it to line chart and make sure you are getting the level very well. So I have to make sure it has touched. The reason this is for a reason. Okay, so I can't tell you everything over here. Okay, I can't tell you. So during the training, I will tell you people. There was a reason I changed it to a line chart. Okay, so I can't tell you everything. Other than that, those who have paid for my course are going to feel bad about it. Why am I sharing everything? So you make sure it has touched it very well. Yeah, so this is what I do. So if price is coming down, it's going to come down to this one. It's also going to come down to this one too as well. So you change it to line chart. So you should touch the level very well. Okay. So if price is coming down, you see, if it is moving, it's going to come to this side. It has broken. It's going to come down to this side. It has broken. So if it is coming down, it's going to come to this level. It's going to come to this level. It's going to come to this level. So it's the uptrend gets invalidated. You get it? So the uptrend gets invalidated. So you change it back to candle chart. So you move to the daily time frame. So basically, this what because as you look out left, there's no data that you can see. Maybe price is going to, but find it very difficult to break. So I'm not going to what there was no data to our left. Okay, there was no data. So this is the only valid, and the reason I didn't bring this one out is what price is going to take a very long time before it will reach this level. So if I'm analyzing privately, I wouldn't have even bring this one because it's not going to get. It is not today that these ones are going to. It's going to get here. Okay. So let's move to the daily time frame. So basically, the monthly, weekly, I use it for my levels. I don't check the directional bias over there. I don't check the sectional bias because it's going to take a very long time for it to what to play out. I'm just a sectional trader. I intraday or maybe a day trader. I'm just looking for some pips, small pips, and I'm out for the day and come up, but come again tomorrow. So the daily time frame, this is the level. Okay, so you need to change the color so that when you move to your lower time frames, it's not going to be you are not going to find it difficult to know where you got that level from. So I use different colors. So when I move to dated mini time frame, I see this level. I will know clearly that this is from the daily time frame, this is from the weekly time frame. And you know, if levels are coming from the higher time frame, like the daily time frame, the weekly time frame, it's very, very strong levels. The reason is it's a strong level because anytime price will get there, if it's a resistance, it's going to find it very difficult to break those levels. So if you get the colors mostly helps you to know that, oh, now if you are selling or buying on this level, it gives you what it kind of gives you more confirmation to the trade that you are taking. It gives you more courage to the trade that you are taking. You get it? It gives you more courage. Oh, it gives you more confirmation that, oh, this level that I'm buying on, because daily time frame, it takes a very long time for things to align, and I'm getting this one at the daily time frame. So you get it. So that's what you need to understand. So at the daily time frame, if price decides to come down, so you see where we had this one. So supposing maybe you are using the candle chart, you would have find it very difficult for you to know or to get the levels very well. So you see, if you change the uh, candle chart, you see how it's looking like. You wouldn't have gotten the correct level. So that's why I mostly use the line chart. So if price is coming down as it has broken and closed, mostly use always confirm when candle has closed, not candle when candle is in session. Always confirm when candle is closed. Okay, because when candle is in session, the reason we have wicks is what mostly you are going to what experience wicks. when candle is in session and you are making decision based on a candle in session, you are sometimes going to get fake out. Okay, you are going to be faked out. So always wait for candle closure before you make your decision. Don't be aggressive. So now the candle has closed. So what you are going to expect is what? A pullback to either this level or to either this level. So that's why I've already marked the level. So these levels are going to be my key levels that I'm going to what take if you've not decided a sectional bias, yes. So if I want to take my buy or sell, I'm going to base on this the levels. Okay, so that's the only thing I'm going to do at the daily time frame, because if you look at your left, there's no data to our left, okay, for us to make our decision. So the reason is what, if you check this one, if you look at your, let's say maybe candle was over here. Okay, if candle is over here, you see, if you look left, there was data over here. You get it, there was data over here. If price is coming over here, there was data over here. So that's why it's very important you check your left to see if there was historical price data. Okay, so there's no data. So you're analyzing, currently analyzing gold. So H4 time frame. So when it comes to, after identifying the levels, when it comes to the H4 time frame, that's where I look at my sectional buy. What is the trend? Okay, because you trade with the trend. You don't trade. You can trade, and one thing too is what, when trading with a trend, it varies based on where the person is focused, the time frame the person is focusing on. Okay, the time frame the person is focusing on. So some people can focus on H1 time frame. Sometimes the H1 time frame trend might be different. So don't argue with anyone if someone is saying, oh, now the trend is a bullish trend, the trend is a bearish trend. Don't argue, because it's might be different. You don't know the time frame the person is focusing on. H4 time frame currently seeing it to be what, a bullish trend. But if someone is focusing on the 15-minute time frame, he see it to be what, a bearish trend. You get this. The 15-minute time frame is what, a bearish trend. So one can be comfortably what, take a sell over here. But me, that I'm seeing, I'm looking at the market at the H4 time frame. I don't see that sell. I see it to be a correction. I see it to be a retracement. You get it. So if someone is saying, "Oh, I see gold to be a bearish trend," or "I took a sell on gold," don't ask the person, "Oh, gold was a bullish trend. Why did you take a sell?" You don't know the time frame the person is focusing on. So stick to what works for you. So mostly when I'm looking at the direction of the market, I look at it at what, the H4 time frame. Someone might look at it at the 30-minute time frame. The person is not wrong. I'm not wrong. Okay. Everyone, you trade based on your comfort level. I'm comfortable when I'm trading at the what, the higher time frame. Someone is also comfortable when he's trading at the lower time frame. Everyone's what, comfortability level varies. So I'm very comfortable trading at the H4 time frame. Okay, so I look at the direction at the H4 time frame. So looking at the direction at the H4 time frame, price is currently what, an uptrend. How did I know it's an uptrend? So that's when the reading of the market comes in. Okay, the market is always, I always say market is like a language. You need to understand what the market is trying to tell you based on the time frame you are focusing on. Okay, based on the time frame you are focusing on. So looking at the H4 time frame, the market is telling me it's a buy. How did I know? So that's when you read. Okay, so if you don't understand how to read the market, you need to what, learn. So it is making higher high when there's a continuation of bullish candles, higher low. It's made some high over here, and there was what, low over here. It's made high over here because it wasn't able to break the previous high, so it's high. Okay, it makes some lows. It's made higher high because it has broken the previous one. It's made yeah, it's made high. Sorry, low. It's currently higher high now because it has broken the previous higher high. So this is higher high. Okay, so this is like a complex structure. That's what mostly people get it confused. This is a complex structure. Those who have attended my training before know understands complex structure. So if you see market like this, market is doing higher highs and higher lows like this, something like this, it's not a downtrend. This is an uptrend. The reason is what, with an with an uptrend, for an uptrend to for a market to be classified or to be seen as an uptrend, it should make higher high, come down and break the higher low. This is making high. Okay, so such market condition, even though the higher low has been broken, is still what, an uptrend because it wasn't able to fulfill the what, the rule says it should make higher high. Currently it's making high because it wasn't able to break the previous. So this is a complex structure. Okay, so it's what, an uptrend. So a similar thing like this one. Okay, so with complex structure, sometimes you might be, it can come in different forms. Okay, some can be like this. All these ones are what, this market condition is still what, an uptrend, because it was just making high high high. It wasn't able to make higher high, so it's still what, an uptrend. So the point it's going to be downtrend is when it has broken this one. So this is the high, this is the low. So such market condition is still what, an uptrend. Okay, so the only time it's going to be what, a downtrend, is when it has broken this one. That is when. But if the market makes something like this market condition without it breaking this one, is still what, a downtrend. That's what you need to understand about structures. Okay, so what I'm showing you is a language. Okay, it's a language you need to understand. So at this point, the market is what, it's an uptrend. Okay, so as it has broken this here, it has broken here, we're expecting it to come down. If it is coming down, this, you are now going to mark our key level. So this is going to be my key level. As I'm saying, with the key levels, you need to use line chart to get the correct key levels, because sometimes it can be faked out. Price can be deceiving, like the candle. So I teach how to identify if the candle has really really broken. Okay, you don't use wicks to determine if a candle has broken. You use the body of the candle to determine that, not wicks. So wicks, we don't consider wicks when it comes to making decisions. So currently, this is H4 time frame. So with the H4 time frame, I'm going to use different colors. Okay, so you have another level over here. So if price is coming down, I'm expecting price to come to this level, this level. If it breaks this one, I'm expecting the next level. So these are my key levels. So if you hear people saying key levels, so this is my key level. So those who use Fibonacci, I don't use Fibonacci's. I don't use this. Is okay for me. This is okay to be determined. So Fibonacci people will say this is what, zero. So I'm expecting. So you see, it fell on 0.5 50% Fibonacci level. That means what? The whole of this trade, this is the middle of this move. So this is the 50% of the move. Okay, 60%. If price is correcting this level is what, it is going to correct 50% of this impulsive move. It is going to correct 60% of this impulsive move. So the impulsive move start from the low over here to the high over here. So it has currently corrected 0.23 or maybe 23.6% Fibonacci level. Okay, it has currently corrected. So the Fibonacci levels are also support and resistance. So this is what, this is a support, this is a support. Okay, this is a support. So you can buy over here, 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 you can buy over here. Okay, so these are the various levels, but I don't use them. Okay, so this is the level I'm expecting price to get to. I'm expecting price to get to this level, then I'll take my buy. That's the level I'm comfortable on. Okay, that's the level. Okay, so the H4 time frame is what, a bullish trend. So if it's a bullish trend, then I'm currently expecting to buy. Okay, I'm expecting to buy at these various levels. I'm expecting to buy over here. I'm expecting to buy over here. I'm expecting to buy at these levels. You get me? So those are the levels that I'm expecting to take a buy on. Okay. So if I move to the lower time frame, so maybe sometimes I'll wait for price to come over here. Okay. But before that, I have to see something like this. I have to see something like, if someone is taking a sell, the person is not wrong. Because if you move to the lower time frame, you can be getting a bearish trend. But I'm not comfortable with the sell. I'm comfortable unless maybe price has come over here. Okay, broken this one, pull back before I'll look for a sell. But I'm not comfortable taking a sell at this point. I'm comfortable taking a buy. So I'll patiently wait for price to come over here, and what, I'll take my buy. You need to take trades that is in your comfort zone. Okay, make sure you taking trades that you have a lot of experience about. So basically, I'm waiting for price to come over here, pull back over here, then I'll look for what? I'll look for a buy over here. So with a buy too, when it comes to me taking entries to, I have my conditions. I have things that I consider. So maybe I'll consider price to that's something like this. So last week, for instance, we with those in my group, I talked about this buy too. And last week, gold was given a lot of opportunities. There was a buy over here on Friday. Okay, the price came to the level, but you see, as it came to the daily level, it just bounced off. Came to the daily level, it bounced off over here. So this is the level that I'm expecting price to. Price came over here, bounced. There was a trade over here. There was another trade over here too. So these are the levels that I mostly take trades on. Okay. These are the levels that. So at this point, is anyone having a question? Where can I get a recorded video? Is anyone having a question? What is the relationship between red coat and blue coat? Am I talking to the wrong people? While you are plotting your resistance and support level, I'm seeing on you are plotting resistance. Seeing. Hello. At this point, is anyone having a question? How much is the cost? Please, can you be getting free signals for demo trade? How can you get demo to you want? Some people want you want demo signal for demo, and if you get profits, what will you use it for? How much is the terms of teaching? I mean teaching. Any question? Yeah. So there was before that there was some questions that I didn't answer. How to identify fake out move the forex market. Yeah, so for you to identify a fake out move simply means you are not waiting for candles to close. Okay, you are not waiting for candles to close. So this is a level. If it does something like this, okay, this is a fake out. The wicks tells you this was a fake out. So at certain point, these wicks were a body of a candle. Okay, it was a body of a candle and later just made a wick. So this is a fake out. You understand? This is a fake out. So for you to identify a fake out, or maybe price can just, as it has broken out like this, it can just come down straight without testing this one, come down straight over here. So at this point, this one has become a fake out. Okay, this one has become a fake out. So a lot of factors come by, but fake out this is a correct fake out. Okay, price looks like it is closing above and later made a wick and closed below the level. So this point has become the wick signals a fake out. This is a fake out. When do you say support and resistance line has been invalidated? So support and resistance line gets invalidated when it is no more valid to be used for decision making. So as I'm saying, if price makes high, lows, this is a resistance level. As price has broken this resistance, I'm expecting it to pull back to this level. So if it decide to break below, this is no more invalidation means you are not going to be used for our decision making. It has been invalidated. Now I'm not going to use this level anymore. Okay. This is no more valid level. It is invalid. So it has been invalidated when the candle close. It is not when a candle is in session or when the candle wicks like this. When the candle wicks like this, it is not when a candle wicks like this and I'll see this is invalid. You have to wait for the candle to close below. If the candle close below like this point has become invalid. It's no more going to be used for decision making. So I'll wait for what? The next candle to come to this level, then I'll take my trade. Now this level is not going to be used anymore because it has broken and pulled back on this pull below. Okay, so it's not going to be used. So it is now invalidation level. Invalidation simply means it is not going to be used for decision making. When daily is an uptrend but H4 is a downtrend with a good sell setup, there was no news and it's within your trade time, will you take a sell? Yeah, so mostly my focus is on the H4. Okay, if daily comes, it is an additional confluence. So I'll take a sell if H4 gives me a nice direction, but mostly too it is better if you watch the previous daily candle closure. If it's closed maybe bullish in alignment, alignment in alignment with what the H4 structure, it gives you. So you see we go for higher, some trades might be what looking, you might kind of, it might look good, but you are not kind of confident. Confidence, especially me like this, my confidence trace come from maybe when the daily candle maybe close bullish and H4 candle, H4 structure is an uptrend. This is what a high confluence, a high confirmation trade for me. I can easily take a buy. Okay, but if H4, it's the structure is an uptrend and daily candle closure is a downtrend, structure of the daily time frame is also a downtrend. It's not kind of, it's not a high confirmation trade for me. So you can be taking, you are, the market gives opportunity every day, but we go in for what the high probability. So some of the trades you just have to sit and watch because you are not confident with it. You become confident in a trade when you have seen it happening more often. So you are not confident with it. So another question was loud and clear. PK, please, how do you journal our trades? So this is how you journal your trades. So now we are having different, a lot of websites. So I let me see. I kept track of my trades last time. Let me see. So mostly you journal your trade journal. So this is how I journal my trade. Okay. So you have to l- keep track of your trades. So this is the history. So at the end of the week, at the end of the month, I will come back to this trade and check the times that it is working best for me, the days that it is working best for me, the days that I'm taking more losses, the days that I'm taking, then I'll be taking them out from my system. The instrument that I'm getting a lot of losses from. So this is basically my trade journal. This is what I mostly consider. Okay, so you can copy that. But you can just check it out. You maybe type in how to journal even on ChatGTP or maybe Google. They can give you a template on that. Yeah. Okay, please. Where is the price on my trading view does not match with my MT5, even on the same time frame? Yeah, so I've always been saying this thing. You don't have to check your MT5. They are different brokers. Brokers are having different, what do you call it, price formation or candle formation. That's what you need to understand. Brokers are having different price formation. So understand this. So I always tell you people, for me, when it comes to currency and commodities, I use Owanda. Okay, when you go to your MetaTrader 5, don't go and check the chart over there. If you are going to use your trading, your MT5 chart for your analysis, that's cool. Don't watch, because your trading view are different brokers. You understand? Trading view are different broker. If you check GBP USD, GBP USD. So you see GBP USD, a lot of GBP USD over here. This is not just fun. It is different brokers. So you haven't on Wanda, they are all brokers. Forex.com is a broker, Pepperstone is a broker, Capital.com is a broker, IC Market is a broker. They are all brokers. Vantage, Black Bull, they are all brokers. They are all brokers. So know the broker you are using their chart for analysis. So this is the broker I use. Or wonder, this is the broker I mostly use for my analysis. So don't go and watch your MetaTrader 5 as I recommended XM Global for you people. XM Global is what having different charts with what, especially mostly those inconsistency happens on the low. Is it the high? I think mostly on the higher time frame, especially the daily chart and the H4 chart. That's where you mostly see the inconsistency because of the times that most of them, their time zones are different. Okay, so it makes the chart different too as well. So you need to understand that. So know the broker you are working with. Don't go and watch your MT. When you go to me, I analyze using a Wanda chart. When I go to my XM broker, what I do is what I just execute buy or sell. That is the only thing I do over there. So those who are asking the broker XM, the link I sent it over there, so you can click on the link over there. So the link is in the chat. You can click over there. Okay, so I hope it understood. So don't go and watch your broker platform. If you are using the reason why I use Owanda, I explain it when you join the training. I explain why I use Owanda. Owanda is a regulated broker in the US. There you don't have a lot of gaps with Owanda chart. You don't have a lot of manipulation as compared to those brokers. You're going to see a lot of gaps. If you see a lot of gaps, especially uh, if you watch the stock chart, maybe let's see Tesla, you are going to see a lot of gaps. I don't know how people those that they trade the stock market they analyze a lot of gaps. How can you analyze? See, this is the gaps that I'm talking about. I don't know how these people trade the stock market. So you see gaps, a lot of gaps. Okay, so you need to understand that. How much is the course? Yeah, so if you want to get a course, it's I don't know which country you are from, but my course is currently reduced to 700. But I'll be having boot camp again to explain more things in details too. Please, can you be getting free signals? So getting free signals on demo. Why are you plotting resistance and support level? I'm seeing on your plotting. Please, Steve, your question is not clear. While you are plotting resistance and support level, I'm seeing on your plotting resistance, only your plotting resistance. I'm seeing only you plotting resistance. Please, can you come again with your question? I don't understand. If you can come and talk to, that's fine. What's the relationship between red codes and blue codes? So it is the bid and the ask price. Okay. It is the bid. If you are buying, your brokers are going to give it to you at a very high price. So they give it to you at their selling price. So is it mostly the ask price? Let me check. The ask price is the highest price. Uh, Yeah. So the selling price of the brokers is the ask price. Okay, so the red and the blue are the bid and the ask price. So if you are buying from the brokers, they are going to give it to you at a very high price, which is their selling price. If you are selling to the brokers, they are going to what buy it at their bid price, which is what their buying price. So you have to know the one with the high price is the ask price, and the one with what the low price is the what their buying price. So spread. So the difference is the spread. Where can I get a recorded video, please? So it will be posted on YouTube. I've understood. I've been hearing a fair value gap. Can you please? Fair value. I don't do fair value gap, so I don't know much about it. This is my system. Fair value gap. I think maybe I don't understand that. Please, I want to know how to identify market reversal. So market reversal is when who is writing on Ben Onoma? My classmate was called Onoma. Onoma, you better stop or you will be kicked out. So reversal, if price is in an uptrend, higher high, higher low, higher high, higher low, higher high. If it is reversing, right, this is what if price pulls back. Reversal is the same as pullback, correction, retracement. You get it, they are all the same. So if price is pulling back, okay, this is a reversal. You're expecting it to reverse. Okay, this is how price reverse. So you identify the trend, and if it is going against the trend, that is a reversal. So this one, the trend is what an uptrend. Okay. So the red you are seeing is a pullback. This is a pullback. Okay. The red you are seeing is a pullback. This is a pullback. This is a pullback or correction or retracement. Okay. Pullback, correction, pullback, correction or retracement, or pullback, correction or retracement. The red you are seeing because the trend is what an uptrend. So that's how you identify a reversal. Come again with using price action to make decision to buy. So if you want to buy, that's what I explained. How can you identify a strong resistance and support? So you identify strong resistance or support based on the time frame you are focusing on. So a strong resistance and support is coming from the higher time frame. Monthly, if you get a support at the monthly time frame, it's a strong reversal. If you get a resistance at the lower time frame, a lower time frame like M5, it is a weaker resistance or support. So that's how you identify a strong. And one thing too that you can identify a strong support or resistance is when you get multiple time frame, reversal, two reversal levels at the same time, at the same level. So something like this. So if you see price action like this, or if you see a pattern like this is a strong level because we're having one resistance over here, one resistance over here. So it makes the level very strong. So that's how you identify that. Going by your journal, you just displayed I don't see a win or loss recorded. Yeah, so I mostly record my winning trades. That's how for me I journal my trades. I focus on my winning trades so that I go back again and check my this thing. I check the pattern. The way I journal my trades is different. But if you are starting out, okay, because mostly you need to have the purpose on why you are journaling your trade. I'm not interested in my lose on. I'm more interested in my wins because I go back and check the pattern that's happened. Okay, I mostly journal to track how often my pattern plays out. I don't journal to track my wins, amounts I made, and those stuff. That's not the purpose. So you need to have the purpose. Are you journaling to get the currency pairs that works for you? Are you journal? But if you are starting out, you need to keep track of all these things. But for me, I journal to go back and check the how often that pattern plays out. I hope it understood. That's how I do it. But if you can, I think most of these brokers are now bringing these statements where you can see your profit and loss and those things. How do you know which trades perform better? Yeah, as I'm saying, I track my winning trades. So all these things are, I mostly track my the pattern. I don't track my wins and losses. So what will be your confluence price comes to your zone? Yeah, so when price comes to my zone, I check, okay, when price comes to this zone, then I'll go and check. I have to make sure a candle has closed in my favor. If I want to take, so this one will be a bearish candle. So if a candle closed in my favor, okay, so this is a bearish candle. I don't take trades when the candle is against me. If I want to take a buy and the candle is a bearish candle, I don't do that. So with this one, I'll wait for what? A candle closure, a bearish candle closure over here. Okay, then I'll look for an entry based on how the candle close. So if it's close over here, then I'll look for how the candle close. If it gives a long wick, there's no entry. That is when I'll go to the lower time frame, maybe the 30-minute time frame, and wait for a bullish candle closure above the zone. Then I'll take my buy. That's how I do it. How much for the course? So the course is currently, if we're in Ghana, 700. If we're taking just a trade or two, uh, if you are taking just a trade, if you are just taking a trade, if you are taking just a trade or two in, please, your question is not clear. If you are taking a trade or if you are taking just a trade or two in a day after spotting a nice entry, either for a buy or sell, do you place multiple buys and sells to maximize your profit if all things plays out? So that means you are scaling in a trade. Reason a lot size plays out, you can use a reasonable lot size. So one thing Rex plays just a few buy or sell. What's your advice or take on? Yeah, so one thing you need to understand is what you need to know your Rex parameter. You need to know what you are Rexing. Okay, so for me, maybe for every trade I Rex 1%. For every trade I risk 1%. Okay, so I give myself the maximum chances. I give myself, if the first trade is a win, I'm call it a day. That's 1% on my account. I call it a day. If maybe the first trade is a loss, I'll give myself another chance. If the next chance is a loss, I'll just call it a day because human psychology, according to research, you can't make like more than two decisions, logical two decisions in a day. If it is more, the rest are all this thing nonsense. So you are either going to base on emotions and those stuff. So two trades within a day, I'm just out. Okay, sometimes I will just make it three, but I don't go more than three trades now. But every trade that I'm taking is 1% within my account size. So maybe if I'm trading like 50,000, 1% would be like $1,000. With $1,000, 1% is going to, it depends on your loss size. Maybe I can use maybe five loss size. With five loss size, if we see me placing one lot, it is within my risk parameter. Okay, I'm not over leveraging, it is within my risk parameter. Maybe where I want to take the trade is high, but I feel like the trade is going to go, so I'll just scale in. So if price starts reversing, then I add all my loss size. So they are all within my risk parameter. So you have to understand, if you are opening multiple positions, it should be within your risk parameter. Okay, if it is 1% on your account, it shouldn't be a flex to what risk more than 1%. That's what you need to understand. So the multiple positions should be within your risk parameter. How can you identify a strong resistance? So we've already talked. When a resistance, so let me receive what when the resistance and support level has been tested so many times without a break, it turns as a strong resistance or support. Yes, please. It turns at a strong resistance or support level. If you test it multiple times, what is the one thing that you take most seriously before taking a trade? The time of the day. The time of the day. The time of the day is very, very important. I check the time of the day. I check and followed by what? I have to make sure there's no news, upcoming news. Is it when a candle closed below above level and when I close below above the previous candle? Yeah, so first of all, I check the time of the day, check the news, then I'll check the candles. If I'm taking a buy, a bullish candle should close. Okay, it's either close or break above the previous candle before I would take a trade. If I'm taking a sell, a bearish candle should close, or what an ongoing candle should break the previous candle before I would take a sell. That's what mostly I consider. Yeah. So at this point, those who want to talk can come in and talk. Hello, can you hear me? Those who can come in and talk. Any question? Hello? Are you people listening? Are you people hearing me?
Yeah, we can hear you, sir.
Yeah, so I'm listening. Those who have question.
So the trading view subscription, how much is it?
It depends. So the one I subscribe is, I think, is it? So you can go to your profile
Yes,
and
we
see.
can hear you.
So you go to your profile. If you go to your profile, you go to bill and you see the price of it. I think that it's $20 or so. Mostly they automatically deduct from my account. So go to your account, your profile. If you go to your profile, go to billing. You see it over there. Then you subscribe.
Okay, sir.
All right. Any question again? Is anyone having a question? Or you're all new traders? I might talk to the wrong people. Any question or we can call?
Sir, somebody.
Hello?
Hello, sir.
Yes,
Hello,
sir.
sir.
Yes, sir. Yeah, I'm with you. Hello? Hello?
Yeah, somebody asked a question invalid, has been broken. It becomes invalid per what you draw. So what if it breaks and retests on that same level? Because for instance, if it is a resistance and it breaks
If break like this.
the resistance level and tested as support, but sir,
Your line, we are not hearing you. Your line is breaking.
What I'm saying is that, for instance, maybe a resistance level has broken out,
Yeah.
or there's a breakout, and that level now turn as support. It is still not a valid level.
Yeah, I'm finding it difficult to hear you.
Can you hear me, sir?
Your network, we are not hearing you.
I'm
I
saying
think
that
what he's trying to say is that if the support is broken,
Mm-hmm.
does it become how do you call it resistance if the direction changes to maybe bullish?
If a resistance is broken,
If the support is broken and the direction changes to bullish direction, that broken support, does it become resistance? I think that's what he's asking.
this is a
Are
support.
you clear?
This is a support.
Yeah.
And if it does what?
If it's broken, it comes a downtrend and the support is broken,
Mm-hmm.
and later it reverses.
Mm-hmm.
That very support, has it become resistance as a valid resistance to use?
Yeah, it becomes a resistance. Unless
Mm.
it breaks it
huh,
and
so
if the candle unless the candle breaks and close it again before it becomes invalid.
Okay. And you didn't when you were doing the time frame, you didn't touch on the 15 minutes. What you do there?
So with a 30-minute time frame, that's where I look for my confirmation. So,
Come with examples. Let's see.
a moment. So this is uh, a trade opportunity that, let's say, maybe the market has presented to me. This support over here. This is my key level. Okay. So now this will be my target. So now I'm expecting price to go over here because reading the trend is an uptrend. Price has reversed, created this resistance over here. So I'm expecting price to come over here. I can't take a buy at this point because for if I've attended my training before, I talk about candle structure. If it is an uptrend, you have to see what the previous candle should break. The ongoing candle should break the previous candle tip to confirm the continuation of the trend. But see where the candle. This is the tip of the candle. You get it. So at this point, I can't take. I have to go to the lower time frame to look for opportunity because the high time frame everything is confirming a buy. So that is when I either go to the H1 if it is giving me an opportunity. So I check the time too as well. So we are within the time frame, the time that I can take a trade. So looking at this candle 8 a.m. I can take a trade. So I move to the lower time frame, maybe 30-minute time frame. So I have to wait for a candle to come and tap this one, close. It's either close the previous candle high or close before I'll take my buy. So let's see if I will get opportunity over here. So now the candle has tapped on this one. So I can't take a buy over here. And one thing too is what there was another additional confirmation. The trend is what an uptrend. Price was in a downtrend. And currently it has broken this one, pulled back over here. Okay, this is where you had a shift in trend. So it confirms the H4 trend. So I have to wait for confirmation. I want to take a buy. Price is what the candles are bearish. Why do you want to do that? Price is what the candles are bearish. You want to take a buy. So I have to wait for candle closure. Then I'll take the continuation. So let's see if you get a trade. So it's still bearish. So at this point, the candle should close above this one. So it hasn't closed. So it hasn't closed. So you see, even though you have gotten a bullish candle, but it is below the zone. Okay, I have to take a trade above this zone. The candle should close above this zone. So you see where it's closed. So this point it become very risky. So let's see maybe if the 15-minute time frame, so 15-minute time frame too wasn't able to close below. If you are taking a buy over here, I always trade on what strong levels. So this is the level I can take a trade. At this point, if I'm taking a buy over here, you see it is far from what this level. If price decides to trade retrace, I'm going to be in a drawdown for long. If I take a buy over here, placing my stop of loss over here, if I accept it, that's cool. You get it? But if I'm taking a buy over here, it's far from this level. So I have to wait. Okay, it's either I miss this trade or price come to this one, then I take the trade. That's what mostly I consider. Okay, but because gold is very volatile, I might not get it. Okay, it has come back again to the level. So at this point, the candle should close. So you see, if we took a buy over here, you would have been in drawdown now because it is far. So let's see. So price is kind of high. You either take, yeah, price
So,
is,
sir, hello,
yeah,
sir.
yeah,
So is that level not invalid? Because it has broken it several times.
invalid like at this point you are checking, you are looking for a candle to close. You are looking for the candle to close above this one. Invalid how? Hello? It is not invalid. So if you are taking a buy over here at the
It broke.
your network. So it's either I take the break, I take a buy at the break of this candle high, okay. Considering the zone, I will take a break over here, okay, or I'll either consider it to be a missed trade. You get it? But I have a perfect example where on gold, I remember you are the one, the Lanista, you are the one who gave out that trade. Yeah, I think this one. So this is a perfect example. So now at this point, what I will do is what? I'll wait for the candle, move to the 30-minute time frame, candle to come to this level, then I will take my buy. So let's see. I think this is a perfect example we had. Yeah. So this is where I will take my buy. Yeah, perfect one. So I'll take my buy over here. Okay, because the candle has closed exactly on the level. And if you see this candle, multiple what, support over here. So I'll take my buy over here. Then I'll target maybe, I think the current H4 zone. So you see, this is where I took my buy. So the H4 zone becomes over here. You get it? So that's how I take my entries. Are you getting it?
Yes.
Yeah. Please, can you I use TradingView without subscription to make good analysis as a beginner? Yeah, you can use it. TradingView is free unless maybe you want the premium version. Yeah, so at this point, is anyone having any question? If there was no question, okay. So see you all same time. So with the boot camp too, I'll if you are in the various WhatsApp, if you are in my following me, I will update you on when the boot camp will come on so that those who want to participate, you will take it from there. All right. So if there was no question, see you all next time, maybe next week again. You have another session. But this session will be posted on YouTube. So if you have not subscribed to my YouTube channel, kindly do so. Go and subscribe. And those who have not signed up to XM too, you can do so to sign up to XM. All right. So see you all next time. Bye bye.
Thank you.
You're welcome.
Thank you very much.
You're welcome.
so much.